Oh man, so Phantom is down almost 4% at the time of recording this video, whilst Bitcoin has recovered from an early slip after the CPI reading to be up 2%. We have a 6% swing where Bitcoin is showing a green day and Phantom is showing a red day. What's going on? I thought we have to always follow Bitcoin, where I'm here to give you the update on what's changed, what the update is, why this is happening. So make sure you stay tuned till the very end. We're going to go into this in detail as always. If you want to support NordVPN, links in the description. Get yourself set up on a VPN. They are kind enough to offer you guys, the subscribers here, 70% off of a 2-year plan. That's 24 months, plus they throw in a month for free. So you got 25 months. It works out like $2 or $3 a month to make sure you've got a VPN, you're secure, your IP address is masked, you can show yourself as coming from a different country when you're logging into your exchanges, playing around with your wallets, when you're in the metaverse, playing around with NFTs or DeFi and yield farming and staking and all the other fun stuff you're doing. Just make sure you're protected. I've got this set up, so definitely recommend you checking out NordVPN. Link in the description code, coupon code ALLMAN. Details in the description box. Right, so what are we seeing, guys? Well, before we get into Phantom, let's just take some time to look at what's happened to Bitcoin here. And we're on the 4-hourly chart here, okay, guys? And in fact, I'm going to go to the hourly because everything happened really fast today. And the CPI reading came out here, okay? 1 o'clock on my chart here. And you can see here, as soon as this reading came out, we took a massive fall to the downside here on Phantom, okay? Big move to the on Bitcoin. Big move to the downside, all the way as low as 43,200 on the wick. And then we managed to climb our way back up with this green candle, followed by two more strong hours following it. Okay, now we're getting a little bit of rejection from the 45,500 mark, which we know is an important 45,500 mark, which is an important level, and naturally is going to take some time to break through. We just need a higher high and then a higher low, and then we can break through. But what's going on? Like, that's, if you haven't watched my video, by the way, on Bitcoin earlier explaining what happened with CPI, why Bitcoin is considered as an inflation hedge. Is it an inflation hedge or is it a risk on asset? We cover all of that off in that video. So make sure you watch that and then come back to this one, because on this one here in Phantom, what I'm going to explain to you is in this market where Bitcoin, as you can see on the right hand side, is up 2%. Why is it Ethereum is down almost 2%? That's a 4% swing. Why is it that Atom is down almost 3%? Why is it down that Phantom's down 4%? Why is Algorand down 3%? Why is Cardano down 10%? Why is Luna down 3%? Okay, what's going on here with these projects? We've actually got, why is it that we've got Matic down 4%? Why have we got Dot down 3% almost? Why have we got Link down almost 4%? Well, I'm going to cover that off in this video, because what's happened is the following. So what we've had is we've had an instance where we know in the short term, and you're going to need to watch that first video, guys, for context, because I'm going to carry on from there. We know that Bitcoin has 2 layers of types of people. People invested for the long term holding, and they understand that Bitcoin is an inflation hedge. Okay, they're holding for the long run. They understand that fiat currencies are a joke and that too much printing has gone on, and Bitcoin is the only true restricted supply asset we have. Okay, that we can't just suddenly find anymore after 21 million. So people then flock over to Bitcoin as that long-term asset. But, very important differential, in shorter term timeframes, Bitcoin is considered a risk-on asset. Okay, so when CPI data comes out or things like that, Bitcoin is considered as a risk-on asset. I'm going to show you exactly what the proof is behind this, and you're going to see the difference, and hopefully it clicks for a lot of you guys, because this is the evidence is here in the charts I'm going to show you. Okay, so what happened was the CPI reading came out, and as you know, we were predicting in the lead up in all the videos we posted beforehand, if CPI came in higher than the 7.2, we knew Bitcoin would take a fall to the downside. Okay, we saw exactly that play out in the charts. Let's pull that up so we can make sure we're on the same page here. Let me pull up. Let's do it on. So you can see here that massive hourly candle all the way, including that wick there. Okay, guys. So that's a big fall from where we were. Okay, so if you want to take that measured move, Bitcoin fell on the news 4% here on the inflation route. But why was the dip bought? This is the important bit here. Why was the dip bought for Bitcoin and not any altcoins? And this is the interesting bit. Because when the inflation data came out, the market was overheating, right? 7.5% year-on-year inflation means the economy is overheating. Inflation is even higher than we predicted. We already thought it was 7.2%. So that gets people thinking that Jerome Powell is going to increase interest rates quite aggressively in March. Maybe not just the 25 basis points, but 50 basis points. That would be a double hike. And the market, no likey. They don't like that. This is why we saw the NASDAQ fall. This is why we saw a bunch of crypto fall as well. Bitcoin fell and all the altcoins fell with it. The difference is Bitcoin has since recovered. The dip was bought. And I'm going to tell you, the dip was bought by institutions. Because institutions understand that Bitcoin is the only place right now that they can put their money in, which is a secure place to put it, where they can actually see some yield, right? Because we're in an uncertain market. We're heading into March the 16th with an inflation, with a FOMC meeting where we're going to see interest rate hikes. How is the market going to react? So we know a lot of institutional buying's happening in the market. And the way to see that is if you go into the charts, and you look at you can even look at the 5-minute candle, sometimes even the minute candle, at market open, exactly when the American market opens and exactly when it closes. Go look at those candles over the last few days. You will see a spike in the Bitcoin being bought up, because that is the American institutions buying more Bitcoin. Now, those institutions who are buying now, they're understanding that Bitcoin is a long-term hold for a hedge against inflation. Okay, very important. The ones who sold when the CPI reading came out, those were the ones who have short-term interests. And by the way, the same institution can have both. I worked at Morgan Stanley, right? Morgan Stanley would have a long-time view fund, and they'll have a short-term trading fund, like the one I was working in, right? Different objectives. So you can't just say, oh, all the institutions. You have to understand which departments. You get the ones where they're looking after ultra-high net worth individuals, and they're doing it over a long-term time frame, 10 years, 15 years. They've been given an instruction to take care of the funds, and they can put it into long-term bets such as Bitcoin. Then you get those that want to trade fast, right? Day trading. Naturally, in day trading or even swing trading, you would have expected the market to fall here, and you would have sold on the CPI reading to the downside, right? Because risk is off. When risk is off, you don't want to be in cryptos, particularly not altcoins and Bitcoin as well. But the dip was bought by the institutions because it's seen as an inflation hedge. Very important nuance. If you're not understanding that, or if I've not explained that very clearly, do hit me up in the Discord and I can do a follow-up or maybe answer some questions on that. But it's a very important thing to understand. And here on the dominance, this is the evidence. What more evidence do you want than this, right? We fell because everybody sold their Bitcoin at the CPI. So we lost some weak hands or some short-term traders. We lost people who were treating Bitcoin as an inflation hedge. That's who sold. And then the ones who bought were those who were treating... We lost those who were treating Bitcoin as a risk on asset. Okay, very important because inflation was high. And then we gained the new people holding Bitcoin who are treating Bitcoin as an inflation hedge. And they've balanced each other out right now. That's what's happened, guys. And that is why your altcoins have not moved up. Because the people buying Bitcoin, buying this dip right now, why are they not buying altcoins? Because altcoins aren't considered a hedge against inflation. Very important differential there. Altcoins, of course, are considered risk on, just like Bitcoin is for those shorter term traders. Okay, very important differential here, and that's why we're seeing the dominance climb here as we see the changing composition of the people holding Bitcoin. Probably the best way to put that and what's going on. Right, enough of that. What's happening with the phantom charts? What are we seeing here? Let's do some technicals. We're here on the hourly chart, and guys, you can see here on the hourly chart, we're in this beautiful megaphone pattern, if you want to call it that, ascending channel. And we know that the majority of times these technical patterns fall to the downside. Now, obviously, you've got to take your technical patterns with a pinch of salt because you've got a CPI reading. And I made that point in my video earlier on, say the Bitcoin video. It never ceases to amaze me the number of very popular crypto YouTube channels which were trading blindly and advising you to trade blindly, leading into a CPI inflation data figure. Crazy. And that was one of the catalysts behind why I created this channel. When I was watching the content that was out there at the time, people were showing their head and shoulders pattern. They were showing this exact pattern I was seeing, or the same one we saw on Bitcoin that we were looking at, right? This exact bull flag here. And they were saying, yes, we can trade this. Watch my 7-figure trade to the upside here. Links in the description. Take out 100x leverage, right? Not knowing or not even understanding that there was a CPI data reading coming the next day. That is crazy. That is crazy to not... to be placing those types of trades without any macroeconomic or fundamental analysis applied to your technicals. That's why in this channel, we're committed to bringing that blend, bringing the two together, because when the two tell the same story, you know you're onto a winner. Very important. All right, so heading back to the phantom chart, we could see we were in this channel, right? We were in this ascending channel. We know from a technical perspective, the stats will tell us this is most likely to break to the downside. You're even looking at the bottom of the wedge at about 188. Fine, we understand that. Now let's take more data in. What other data do we have? Well, we know the initial pivot is at this point here, at 214. That's our first pivot. And you can see we're getting a little bit of bounce action from there. Okay, that may not hold up so well if more volatility enters the market, and we may need to come further down to our next level, which is at this pivot of 206. The good thing with the 206 level, it sits nicely with our 208 horizontal support, which we know has been Phantom's comfort spot. Anytime Bitcoin was a little bit nervy or the market was a little bit volatile, we know Phantom liked to head to 208. It was a comfortable spot for it, and it's been there many, many times. We can cover it off. It bounces off there for confidence, let's call it, and it goes on its journey back to the upside, and it'll come back down to 208 for a little reassurance check, right? So that's the next level we're looking for, and you can see exactly that played out in this about 4 hours ago. Let's just zoom in. Exactly, literally 4 hours ago before recording this video, you can see this candle wicked all the way down to 208. Got a confidence check and wicked back all the way back up into this candle, a couple of good candles, and now we're curling back over. Are we going to head lower than 208? Well, technically you can, right? Because technically, like I said, the bottom is all the way at the bottom of the wedge, which sits at 187-ish, but you've got some other support coming in from here as well, 194. Those are my levels to the downside, okay? Now, you can also call this a bit of a head and shoulders pattern if you wanted to, okay? You could argue this is a bit of a head and shoulders pattern which would break out to the downside, and we can monitor that in terms of its technical move as well, because that move would be the measured move, very roughly, guys, there we go. That would take you, again, perfect confluence there with our 179 horizontal support here at the bottom, okay? So that's what we're monitoring here on Phantom. There is risk to the downside because of the environment we're now heading in. We're heading into an environment which is overheating. The market doesn't like it. It's nervy. We know that some movements have been priced in terms of interest rate increases. The market knows this, right? That's why stocks have taken a battering. In most part, Bitcoin's retraced quite a lot. A lot of altcoins are way off their highs. But the question is how much has been priced in. And the reality is we won't know until March the 16th. We do get a CPI reading before then as well. We'll get one more CPI reading before Jerome Powell talks, I believe, on March the 16th to announce his interest rate hike. And I think that will be another catalyst for us. Again, we'll cover that off on this channel. I'll be here daily covering in the lead up to that anyway. And then really, after that, once Jerome Powell starts speaking on March the 16th, after the FOMC meeting, we'll then find out how much did the market actually price in. Have we already priced in 2 rate hikes or just the one? We need to see what happens there and what does that mean in terms of the price movements here on Bitcoin and therefore Phantom. Let's zoom out now and take a look here at our daily chart. And on the daily chart, what we can see is a similar pattern, right? We've kind of created one attempt, run up to the top, ran back to the bottom, similar levels here and here, ran up again, and we've come back down. Now, the good news is the next time we run up to test these areas which were acting as resistance, we should be going up with really good strength here. If we bring out the EMA ribbon as well, you will see here we're just now closing below our EMA ribbon again, which undid some of the work we had 3 days ago, which is unfortunate because Bitcoin was rallying quite nicely, and this has kind of undone it in terms of flipping us back below our EMA ribbon. So we need to keep an eye on this. We do ideally want to close above 230 and build some support, because at the moment we've not got any support really between 208 and 237, and that's a big chasm because it means anytime on our journey to 237 or 246, if we panic, we end up falling all the way back down to 208, which is where it likes to get its reassurance from, which from a technical perspective isn't ideal. That's quite a big spread, which is why, we're having to head all the way back down to those levels again here on Phantom. But in these moments, guys, it just, it reminds me that we need to remember what our intention is behind investing in these great projects. And again, I'm posting a video later on today, probably, which is a bit of a different video, guys. So make sure you go watch it and support, hit a like on that video as well, which is just me talking about some psychology of how we're all investing in crypto the wrong way. So make sure you go watch that video when it comes out, because the reality is we need to be believing in the long-term narrative. And if we're believing in the long-term narrative of Phantom, and you're sitting here and it's at $2.15 still, after all the time we've had to pick up, what is this? Is this another opportunity for us to buy the dip? Are we going to regret this when Phantom runs? And trust me, it will explode to $5 and then $10. It will. It's a very underestimated layer one solution, solid team, solid fundamentals. This is not some sort of a meme token, right? This is a solid project with a solid ecosystem, from DeFi to NFTs to gaming, proven, right? Top 4 or 5 in terms of DeFi Llama total value locked. And if you look at the market cap value, we've spoken about it plenty, guys. It's got all of that covered. So from a fundamental perspective, we just know it's a matter of time before Phantom gets picked up. It's listed on Coinbase, people are talking about it, and the price will inevitably move. But again, go watch that video I'm going to post later today, because in that video, I explain exactly the fallacy which is trapping all of us, because we have the mindset of wanting the price to pump instead of seeing the blessing of the price being retraced and being so suppressed for long, which gives us time to buy more Phantom. We should be in the game of accumulating as many of our favorite tokens as possible, and it's a blessing whenever the prices are retraced, because it just means people haven't cottoned onto it. And when you've got the true conviction, you don't need the market to tell you or give you vindication that it's green, right? We don't have green candle disease. Whether it's at $2, we in our head know the true value of Phantom. So what does it matter? Nobody can undo that, right? So we don't need the market to run the price up just yet. I'm happy buying as much Phantom as I can and accumulating. So there you have it, guys. There is your daily update on Phantom. As always, if you appreciate this type of content, don't forget to hit the like button and subscribe. As always, NordVPN, links in the description. Get yourself set up on a VPN, guys. If you're watching this video and you've been following me in crypto and you've not got set up on a VPN, seriously, guys, you need that VPN to get set up. NordVPN, the best in the game as far as VPNs are concerned, offering 70% off 2-year plans plus a month for free. 70% off. So it's about $2 or $3 a month, guys. You cannot go wrong for setting yourself up on a VPN, making sure your account is secure. As always, guys, thanks for watching this video. I'll see you in the next one.